And 72% of the time the market goes up. And the answer came to me. And that's when I developed my chart. The answer came to me is because, just like Caterpillar, when they pull their money out, you get out. Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye, 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 bye. And welcome to my podcast. Thank you very much for joining us today. Okay, quite a market. Everybody's all excited about tech going up, but we're going to look behind what's pushing tech up. Can it hold? Is it sustainable? That's the big question. Is it up for the right reason? It's not just when stocks go up. You got to look behind it and see, are they going up for the right reason? That's what's really important. And most traders don't do that, but we're going to dig into that today, okay? And that should help you out a great deal. Also, the other day, I didn't have much of a chance to go over, I wanted to go over what was going on in the economy, because the economy is very important, especially going into these midterm elections. So I'm just going to cover it a bit. And I'm going to start with, again, what's going on with our economy as far as what we're being told by the jibber-jabbers. Go ahead.
Every CEO I've spoken with recently basically has said the same thing, that the economy is strong.
Economy's strong. And we have others saying the same thing. How strong the economy is. We've never seen it so strong. It's a golden, one guy said today, it's a golden era. We're in a golden era. Are they nuts? It's not true. And once I finish that, go over and bring you up to date what's going on really in the economy and tell you the truth, which you never hear, I'm going to then go over what's going on in the stock market. That's interesting. So let's get started. So what do groceries and yields, bond yields have in common? They're both going up. They're exploding. So both the 2-year, which is the most important one, because that affects all of us the most, and the 10-year. One reason is because of deficits. We're spending $5 billion a day more than we're taking in. That means we have to sell our debt, about $500 billion every quarter. The banks used to buy it, and foreigners used to buy it, but they're not buying it like they used to anymore. It's becoming a problem. That is killing us. Groceries, why are they going from $64 up to $158? Inflation. Think about it. Energy prices, fertilizer cost is insane. The fertilizer, I tried to get what the cost of fertilizer was over the last 4 or 5 years. Maybe you get that for me, Willie. But fertilizer has gone nuts, and we need fertilizer big time, and we import a lot of fertilizer. Willie, get that number for me. But in the meantime, we're seeing energy prices, fertilizer, labor costs going up how much? In the last, what? So it's gone up about 70% in the last 5-6 years. What's that tell you? That cost is almost in everything. So they're telling us how we're in a golden age. Does that sound like a golden age? Doesn't sound like a golden age to me. And again, inflation, energy prices, fertilizer, the big one, labor costs, shipping costs have gone crazy. And corporate prices, they keep hiking them and hiking them and hiking them. Now, let's talk about yields. Yields are shooting up because the government, again, is drowning us in deficits, $5 billion a day. Government has to sell $500 billion every quarter, debt, treasuries, borrow money. And that pushes yields up, but it pushes groceries up. What caused groceries to go from $64 to $158 wasn't the deficit so much, but huge inflation, because Washington keeps on spending $5 billion more than they take in, and they don't give a damn. Now, there's a couple different problems. Deficits push yields up. Inflation pushes grocery prices up. So again, deficits, you can look right at deficits and see, okay, I see what deficits, they're pushing our yields up on our bonds. And you take the 2-year yield, that's the most important, because that's the yield you want, around 3.25. Today, I think the 2-year yield is over 4.20, something like that. 4.26. You want that around 3. Ideal is 3.50, 3.25. But if you can get under 3.75, but we're so far away from that, that's a killer. But nobody's talking about that, are they? Of course not. I'm not going to tell you the truth. And inflation is getting worse and worse and worse. Now, so again, the same, when you went into a grocery store in 2020 and bought $64 worth of groceries, it's cost you $158, the same amount of groceries. That's insane. That's not inflation. That's somebody mugging your damn wallet, lifting your wallet. 2/3 of Americans are now saying groceries are unaffordable, and that's a tough thing for Trump, because we got the midterms, and he's been trying to settle what's going on in Iran with these gangsters over there, these crazy people, these Fruit Looms, that he can't do it. So he's got to keep bombing them, and you start to see oil keeps climbing back up, gasoline keeps going back up, but he shouldn't put in his judgment, okay, I better not do this in Iran, because I may, gasoline may go up, grocery goes up, and therefore we're going to lose the midterm election. No, he should do what is right. Long term, we got to get rid of these fanatics, and this seeps into our stock market. So, housing. Think about housing. What's going on? Even worse. The median home is now $440,000. Okay, that's insane. And just think of where a house was, 10 years ago? Just 10 years ago. $250,000? So, your payments more than doubled. And if you rent, like in New York or Chicago, you got to pay $5,400 for 1 bedroom. A 1-bedroom house or 2-bedroom house here in Sarasota is insane. You're paying almost $4,000 for a little tiny nothing house in a terrible neighborhood. You're paying almost $4,000. Sometimes you can find a deal for $3,500 if you're lucky. You can't find them because they're snapped up. So what is this thing about golden? We're in a golden age, they told us. People are drowning in debt, credit cards, payday loans, buy now, pay later. And they're doing it just to pay food. They're using the credit card for medical and to pay food. They're using pay now, pay later just to buy food. They're falling behind. And when people fall behind, the cracks show up. You can't hide them. Foreclosures are up. Think about the foreclosures. 21% since last year, foreclosures. A lot of that is FHA and VA loans. Luckily, 68% of the people have loans between 3 and 4% interest. But that screwed up the whole market, because those people will never sell their home, and therefore our inventory was so low, you can't put inventory out. Now the builders come in and they try to build cheaper houses, but it's not the house, it's the land. The land cost has gone nuts. And if you're lucky enough to get a good deal on a piece of land, your city, your county, your state will screw that up. It takes you 5 years to get an approval, and the cost is enormous. The land cost goes up, the building lot goes up. The cost of the house is not the problem, it's the land that's underneath it. and cities and states and counties, all these environmentalists are overdoing it. And you could get these housing prices down by at least a third or more if you get the approval process done right away and take these crazy granola bar eaters, okay, and put them in a cage, get rid of them, but have responsible people there to watch the environment. These aren't responsible people. Environmentalists today are like Hamas, the same as Hamas. They're killing us financially, environmentalists today. Everything's cost more because of these crazies. Now, Hormuz is going to be the most important thing for Trump. If we lose the Strait of Hormuz, this is going to get a lot worse. Now, poor countries, that means shortages, what we're going through. Rich countries like us, that means you just pay more at the store. So bottom line, everybody's lying to us how we're in this golden age. We're not. The cost of living is crushing people. Groceries, housing, rent, crushing people. Families are stressed. Debt's rising. And for a family who makes a combined income of $65,000, they're struggling. And matter of fact, that's gone now from someone who made $65,000, now a combined income of $85,000, $90,000. They're struggling now. So let's talk a little bit about today's market. Everybody's running around buying tech. Wait, hold on a minute. Tech has the highest dollar volume of any sector. Retail traders, okay, they trade more tech than any other sector. Think about that. It's always tech, tech, tech. Tech has the highest institutional participation. You know the stocks, Apple, Microsoft, NVIDIA, you know them all. Unbelievable. Those 7 stocks are 35% to 40% of the S&P trading volume. What are you, nuts? They're getting crazy. The valuations are nuts. Every day, more money changes hands in tech stocks than any other sector. Now, this morning, the banks, this was really interesting. You got to know it. You got to follow your yields. If you don't follow your yields and you're just trading and listen to the crazies, listening to CNBC, the jibber jabbers, you will continue to lose money. Already, retail investors lose 85%. 85% of the time they lose. Banks, you got to know yields, what it means. The 2-year and the 10-year. If you know what those do, if you know if the 2-year goes up and the 10-year goes down, these stocks are going to do this and that. If the 10-year goes up and the 2-year goes down, these stocks are going to do that. If the 2 years even and 10 years even, or they go up together or down, the stocks will do this. It's not hard, but you've got to go and understand what the yields are doing. It's easy. I've given my traders a little book, okay, with what you look at when you're trading during the day. What are yields doing? And it'll tell you exactly what stocks are going to move, what stocks aren't. Now, today the yield curve is steepening. Well, that's good for banks. They make more money. But wait a minute. If it's steepening for the wrong reason, that's inflation. The right reason is growth. But the steepening for the wrong reason, inflation, and people are jumping in and buying stocks, not understanding that. That's a problem because the gains eventually will all unwind, all the gains you got. Now, on the opening today, traders rotated out of banks and to tech. Now, remember, when you're trading, there's 3 simple rules when trading tech. Tech only rallies when the 2-year drops faster than the 10-year. Tech only goes down, tanks, when the 10-year sinks faster than the 2-year. Those 2 rules, if you keep those in mind, that's going to help you big time. On the opening, traders rotated out of banks and went into tech. Now, that's going to be a big problem. Going to be a big problem. Now, also what's happened is traders ignored 2 important rules. Never buy, especially tech, in a downtrend. So what happened today, you're looking at, oh wow, the Nasdaq's up 534, the S&P's up 60, Dow's up 351, all tech. But wait a minute, there's a problem. There's snapbacks. What am I talking about? They're going to give it all back. Why? Because traders got pulled in later in the morning, because here's what happened. Bondholders, traders who buy bonds said, hey, there's a lot of risk here. We look forward, not backwards to last quarter. Looking forward, there is a lot of risk. I want more more of a yield. So I'm just going to finish this up, give a couple more minutes because this is important. So traders, as the morning went in, all of a sudden they got sucked in because all of a sudden they started buying more tech because the bondholders demanded extra yield because of the risk going forward. It's called a term premium, and tech will always get this pop, but it never lasts. People don't understand how yields work. So tech leaders, you know them, the 4 biggest stocks that make all the tech, that make up the machines that make the chips, and the 4 companies that buy those tech machines, those, if you take 6, 8 companies, hold up the whole stock market. So here's what happened. There is a huge downtrend in the leaders. And if you go to any chart, and I'll show you my chart, if you go to any chart, any of the leaders, the tech leaders, okay, you can see clearly what's going on. Look at ASML. These are the 4 big leaders. That's where all the money is, and also in TSM, Microtechnology, and Intel. Those 6 stocks right there, 7 stocks right there. Look at this. If you go and take ASML, look at that big downtrend. So yeah, it's going up today. It's going up 3 days in a row. But what good is it? It's a snapback and a severe downtrend. You're going to give it back because the trend is down. Take a look at CLAC, another big leader. Everybody's excited. It's up today. Everybody's jumping in. Hey, Nasdaq's up 533 points. The S&P's up 61. Dow's up 357. Wow, look at tech. But wait a minute. Would you buy a boat if there was a big hole in the bottom of the boat? Well, that's what they're doing. They don't know what yields mean. They don't know how to follow yields. They don't know how to again, they have no clue what yields mean. Yields tell you exactly when to buy and not to buy. But we're in a solid downtrend. Look at that's a downtrend. Okay, stocks were up for 3 days. People were jumping in, buying. Were they nuts? My Pro 2 shows it's all red. But even if I didn't have the red, it would tell me, the downtrend alone is telling me, you don't buy stocks, tech stocks, in a snapback. Look at AMAT. Same thing, all downtrends. LRCX, all downtrends. Go to TSM. The downtrend, severe. Look at TSMs are going up 3 days in a row. Who cares? MU, unless you're a day trader, MU, 3 days in a row. But look, what good is it? It's going to go down. It's going to go back down because you're in a downtrend. Anytime you have your stock rallying in a downtrend and the yields are wrong, it's going to give it all back. But nobody tells anybody that. And that's why 80% of traders lose money, you know? That's crazy, isn't it? So now banks, they jumped out of banks and went into tech. Well, they nuts? Now the banks have a problem. If you look over the last 4 or 5 trading days, they can't break out. They keep consolidating, going sideways, but they can't break out. And people keep buying, say, how come they're not breaking out? How come they're not breaking out? Well, because you've got a big problem. Banks aren't going to break out because, again, oil is what caused them to go up, the stock to rally. Oil went up, banks make more profits. But oil's not going to stay here. There's no demand for oil. It'd be great if there was a big demand for oil. We're running out of oil, but oil, we're not running out of oil. There's a glut of oil. Oil is going up because of headlines. Every time you see a headline, Trump, another war with Iran. That's what's killing you. So every time you see oil going up, it's going up for the wrong reason. And tech, you got yields going up for the wrong reason. Yields are going up because of inflation, not growth. So you got everything's backwards. So if you understand how the yields work, the bond market, it's so easy. We teach people this every day. Yields is the truth serum. Yields tell you exactly what your stock is going to do that day, what it's not going to do that day. And do you know, if you take all the traders, retail traders, there's not 10% of them that know what a yield does. there's not 10% that can tell you, what if a yield goes up, the short 2-year goes up, the 10-year goes down? What happens? They don't know. What if they both go up together? What happens? What if the 2 and the 10-year both go down? What happens? They don't know. So today they listen to the jibber jabbers on TV, all excited. Here, play that cut again, how everything's wonderful.
Every CEO I've spoken with recently basically has said the same thing, that the economy is strong.
Yeah, well, economy's great. Look, there's nothing like the stock market. There's no place you can make money like you can in the stock market. But the bottom line, you got to know how to sell short. You can't be just buying long. You can't just be buying stocks. Do you realize if all you do is buy stocks, you're scared of shorting? Do you know how good of a trader you got to be? Every time you just buy stocks, you never short, you just buy. A pro can't do well. And a retail trader thinks you're going to do well? You can't. You got to know how to go long and short. Learn how to follow the bond market, the yields, that's all. It's so easy. In 1/2 hour, you'll know exactly how to follow yields. Join our gang, free for $10. It's free for 10 days. Get all upset. Okay, so I hope this helped you out today. Be careful. Everybody's buying tech. Everybody's buying the same tech stocks. But when they're going up in a downtrend, you're going to give it back. It always works that way. If it's going up in an uptrend and the yields are going up for the correct reason, not inflation, but growth, you'll be fine. Check us out, philsgang.com. See you on the charts.